Thank you again, Dan, and thank you all for coming. Thank you to the sponsors and our guests. I'll be very quick in kind of running down what my slot in the speeches and talks are today with regards to post-game. After the race to zero, what's next? When we were designing this and talking about the presentations in September, I thought, what am I going to talk about? The state of the industry. I'm going to pull up a few charts. I'm going to try to. All that got incredibly easier on October 1st, which is actually a brilliant. So Schwab changed the game. Everything goes to zero. Nicely done, date-wise, on October 1st, because it tells everyone this is clean. This happens on October 1st. We'll see what a nice clean month, 3 months will be like to the end of the quarter for the next earnings calls. This is all designed with some thought. But before I jump into and share a little bit of what we've done in terms of collecting data about this new world we live in, I think this is all just a moment to kind of pause and say that this is as different an era as going to decimalization, as different an era as high-frequency trading, as the birth of AI and machine learning. And you'll know where you were on October 1st when all this went to zero. But as Dan kind of pointed in some of his comments, we're all here to take advantage of frictionless trading. But I think and I wrote about this in a particular, if you follow me on LinkedIn, you'll have seen a preview of what some of what I'm going to share with you. But that is that there's a real concern about the gulf that is created when trading goes to zero as a cost. There are still people, then who's left paying for commissions or who's left paying for services and so forth that are a natural part of trading? Just because an aspect of cost goes down, as Dan mentioned, there's more of a opportunity to invest in education, in the right tools to make yourself a better trader. And that's why we're all here. If that's not done, I think there's a greater gulf of people who will run into the buzzsaw of free trading and get washed out in terms of fear and greed taking over and trading more often for worse results. And last thing I'll mention as we step into this, let me move into my first slide here, is that what really fills me up with optimism every morning is we're all trying to have for our customers, for you, for everybody, for all of our clients, 3 out of 4 outcomes. Every one of us will take a large win. Every one of us will take a small win. Even for the learning, a lot of us will take small losses. All we're trying to do in this room, and all we're trying to do going forward after today, is avoid the big loss, that 4th category. And the AI and the machine learning and all the tools and all the knowledge are here to help you avoid that 1 out of 4 outcome. So a big thank you also to the CMT and the organization. Who's here a CMT or involved with the CMT organization? Fine group of people you are. Thank you for coming. But I saw one of the speakers that came through one of the chapters had this interesting set of slides, and I thought I'm going to do the same thing. What you're seeing is on the top, the AI's performance that we call Holly from just 2018 to the beginning of October. And the first line actually is the gross return, and the yellow line is the net return, net of commissions. Well, all that's going to go to those 2 lines will be the same going forward now. And then the bottom line is tracking the S&P. The middle chart is the S&P. So it's tracking the same. And then the last one is our trade ideas, visitation to the website, number of hits that we've had. And through it all, there's a couple of takeaways. I mean, Holly's performance continues to outpace the S&P on a cumulative basis. And in times of great stress, maybe even preceding, this could be, we should be tracking trade ideas traffic ahead of big dips, because I guess where you see a spike, it's like tremors and animals, like you can sense the earthquake is coming. Leading indicator, exactly. Thank you, thank you, Teresa. So we have that. Does this move? Okay. So again, October 1st, I've already talked about. This is the day that darts died. And it was interesting to see the impact and then recovery of some of these stocks. And so that's what I've kind of graphed here for you. DARTs, thank you very much, are daily average revenue trades, an ancient term used by, we've discovered in texts that used to be a barometer for measuring online brokerage health. And so this is the reaction to Schwab. You can see Schwab in the purple took a hit but has recovered. I think, again, this was a move meant to say, why go to zero when things are great? If Treasury notes are also declining, why do this in an environment where it's stressful for these companies to be making money? And Schwab decided to do this simply because it was not a boom time. It was a time where we're kind of flatlining and uncertain as to what comes next. So, and these are all, again, from a roundup of the earnings calls that came immediately after the quarter ended. And you can see some of the exposure to retail commissions that each of these players and stocks had. So I thought this was interesting to show. All right, so Bank of America estimates that the revenues from the commissions for leading were Ameritrade, followed by E-Trade, Schwab, and then for my own research, Fidelity at that range, that same range around Schwab. Okay. So I want to play a quick little game, and I think we'll all enjoy this. As I said, we did some research into the earnings calls, and oh, wait a minute, this is supposed to be a little transition, no? I gave away the answers. All right, so avoid, this is terrible. This is, okay, no transit. So this will go by even quicker. So it's what they said. So we remain focused on offering intuitively designed products that reduce barriers to our financial system, including account missions and commission fees. What they meant is, don't look down. So this is Robinhood basically saying in the wake of all this, we remain focused. We're going to continue to do what we do. Everything is fine. No fire here. Keep, everyone stay calm and carry on. Just don't look down. That's Jack Randall. That's his take on it. Fetus, yes. So what they said, and I love this quote. This was just simply one of the honest things I've ever come across. We didn't favor the shift. We don't like it. We didn't, but in truth, it happens to enhance our competitive position in our core retail franchise. So that is Mike Pezzi, the CEO of E-Trade. What they meant was, you guys can kiss. We just lost 17% of our business. Say goodbye to the bonuses this year. So I'll talk a little bit more, but E-Trade is in a very good position, I think, because they have launched relatively one of the few brokers to have recently launched their new platform, which will carry them for several years going forward, in an environment where those who haven't launched with or invested in their tool set are now stuck with a sudden decrease in the funds available revenues. They still make money from trading, retail commissionable trading, but what was commissionable, but it's not as much. And so the effort to reinvest and relaunch a lot of these tools is a higher ROI, is a higher hurdle to cross. A couple more of these. So what they said, in this new paradigm, platform functionality and customer experience are more important than ever, and that is where we truly differentiate. I was going to try to really fool a lot of you by saying, it's the same guy, we're doing it again. And what they meant is exactly the same. This is the truth. Regardless of whether you're E-Trade or any broker, all the brokers have, as a new paradigm, the customer experience, the functionality that they're going to have to differentiate on. What they bring to the market in terms of a tool set, in terms of education, is what we're all trying to do. We're trying to create curated, experiential experiences, really, to get across content and technology for, in terms of our mission at Trade Ideas. We're all trying to help our customers make better decisions. I'll talk about that in a moment. One more. So what they said. So with price going now down to zero, it doesn't preclude us from really understanding where there are opportunities to best charge for the value created. And this is actually also a pretty good one. What they meant is, like, if we're going to get out of here, let's stop digging. Everyone just stop digging. And that's Tim Hockney, the president and CEO of TD Ameritrade. So this is, again, unless this is clear to everybody, costs to trade have gone to zero. But if you want to use other tools or other aspects to help you make better decisions, that's where we're going to be. That's where they are looking to say, well, where can we charge for solutions that we really think are going to help if it's going to be really a zero cost for you to trade. From the same team, there's a number of things that we give to everyone today that a number of our clients really don't utilize, but cost us money, so we think there's probable ways to value engineer that offering. And this is actually a smart approach in terms of zero cost to trade. You're going to see packages and stronger segmentation of experiences where if you're a new trader, you don't need, the exponential moving average on a chart laid out for you. You need it much more basic. And so tools that advanced with experienced traders use won't be for you as you start your journey. But as you get better and as you progress, as you go through the internship and the residence, as Dan was talking about, you'll be exposed to new and better tools. And by right sizing, instead of one size fits all, which a lot of brokers gave in terms of their platforms to people, you'll see different packages, and then there'll be costs associated with them to use, whether it's trade ideas folded in or whether it's other solutions that these brokers are going to be pulling in. I can tell you from experience of having done this for over 16 years in that there was a strong feeling among the brokers that used to exist of, the not invented here. If it wasn't invented within our four walls, we don't want it. We've got a great development team, and we're charging money for commissionable trading, and we have this solution. And I think that's changing as we speak. And I love this one. Responses from competitors were precisely as we expected. This is Schwab CEO Walt Bettinger, right? Said the cat ate the canary. Okay, so I'm kind of wrapping up here, but the signposts which we'll all be looking for among the brokers and in the solutions that are being offered and that will come across your desks, whether you're a professional or retail, are the following. And this is what we like to do. This is what a lot of companies do, signposting to say, if these things happen, we're prepared in such a way to react. And for us at Trade Ideas, in terms of how we engage with our brokerage partners going forward, is we're looking for if there's pressure on Robinhood to continue growth. If that growth comes more slowly or flatlines or even pulls or starts to decline, you'll know that the other brokers are doing a good job of pulling customers back. The lure of this free trading, frictionless trading that Robinhood built a business on, $1 billion business, is no longer differentiatable. Secondly, there'll be an emphasis on APIs. You'll find part of this argument again, brokers are switching from the trades have to come through the technology that we've invested in and now give to our clients in a kind of walled garden. That's gone. Instead, using APIs where others can build trading applications and then make those trades through the broker's pipes, if you will, execution. We believe that's where the many brokers are going to be moving to, so that we don't care what tool you use, we just want you to do it here. We want it to come across our wires, as long as it trades here. And then this idea that was brought up already in the earnings call with TD Ameritrade is that movement to pay for what you need, right? Shifting a customer costs from commissions to actual tool sets and experiences that you'll be paying. And it's meant to right size and fit exactly where you are on the curve. If you're a serious trader, serious tools and analytics for which you use. If you are not, and if you're an occasional trader, then it's a different experience and a different set of tools. So for Trade Ideas, we're here to help fulfill brokers. We're here to help brokers fill their brand promises. And some of them are doing it better than others. But we're also here, obviously, to fulfill our own mission. And that mission is, as I've said, is pretty simple. We help our customers make better decisions in the markets. So with the technology that we've had and the innovation that we've spent and the recognition that we've received, as Dan walked through some of the accolades from this year and from years past, we were already in conversations with different brokers to bring this technology to create a halo effect for them and to serve their clients and ours by bringing machine learning, artificial intelligence as an analyst, as an advisor into the trading decision process. And we'll have more brokers vying to do that with us as we launch these innovations that Dan mentioned about paper trading. We'll also, in turn, be working on our own API connectivity so that we can bring brokers into the Trade Ideas platform, and those using the platform can just simply direct their trades to the brokers that they have accounts with. And in this way, we see ourselves as kind of a lending tree for online retail brokers and professionals and any other brokerage that is looking to present this technology to their clients. And by doing so, we'll be able to further educate and differentiate within the offerings of how brokers are using Trade Ideas to say, at E-Trade it looks like this, at TD Ameritrade it looks like this, at Schwab it looks like this, and so forth. And we're well on our way to doing that. That's my last one. Okay, so we'll keep things moving, but hopefully you're armed with some more information about how about what comes next. And thank you very much for your time. Enjoy the rest of today. Thank you.